Klarna finally filed for an IPO on March 14th. Will a successful public debut kick off the next wave of Fintech IPOs? And will retail investors get a chance to participate? The CoreWeave IPO date is set for Friday, March 28th. Did the underwriters lowball the valuation to try to pump up demand and IPO excitement? It looks like Robinhood customers will get a chance to participate at the IPO price, but contrarians are raising red flags. In IPO Radar news, Ripple is cleared by the SEC. What's next for XRP? Fervo Energy plans an IPO. Perplexity is raising another round, and Google takes a whiz. Welcome to the Access IPOs podcast, where we explore opportunities to invest in the world's most innovative and disruptive pre-IPO companies. I'm Craig Stevens, founder of AccessIPOs.com, and today we're going to look at CoreWeave first because the CoreWeave IPO date is set for Friday, March 28th. So CoreWeave filed an amended S1 on March 20th, and that finally gave us a look at the offer, and that offer is 49 million shares. And they started with a range of $47 to $55 per share. They start by releasing these numbers, and then they take those numbers to investors in the Roadshow and try to get a sense of the demand for shares and for CoreWeave IPO. And one of the interesting things about this filing, this amended filing, these terms, is that they sort of lowballed the price on this. When you do the math and you calculate the market cap of this deal, it's somewhere around $26 billion at the high end of the range at that $55 a share. And since November, they've been talking about a $35 billion IPO. So it does seem like Morgan Stanley and the other underwriters here have lowered this price to get it out to investors, let them take a look, and if the market deems this to be worth more, they're going to raise the price range next week. I'm recording this on Friday, March 21st. So they'll raise that price range and narrow the price range next week. And then the final pricing of this deal is going to happen Thursday evening. Now, private transactions, and I'm sharing my screen now, the Hive platform, shares are changing hands at somewhere around $1,400 a share. And so we knew this was going to be a split going into this IPO, and we did read in this amended S1 filing, they split the shares by 20 times. So there was a 20-for-1 split. And if we do the math there, so there was an accepted bid on March 19th on the Hive platform at $1,400. If we do the math, cut that in 20 times, that's about $70 a share. And so they're putting this thing out there at $55 a share, but we're seeing some pretty consistent transactions closer to that $70 per share range. So a couple things may be happening here. They may be lowering the price just to build up some excitement for this IPO and to show that the demand is there. Once they take this out on the roadshow, they'll be able to gauge demand better. We expect to see that price range increase. They also might be trying to line up a pop here. We know the underwriters have been starving for business for the last few years. Morgan Stanley may be lowering the price on this. JP Morgan and Goldman Sachs are also involved, but they may be lowering the price on this deal so they can get a pop, generate some excitement for retail and for the institutional investment community. Usually when they amend the S1 filing with terms, that's when the retail roadshow kicks off, or the roadshow. And so what happens is the underwriters and the company go around to institutional investors and sell this deal and try to drum up interest for long-term investors. But they also add this retail roadshow deck that retail investors can look at. So if you go to retailroadshow.com, you can see that the CoreWeave IPO is there. They do a video and they do a slide deck. And I usually just look at the slide deck, but the slide deck is kind of a regurgitation of the S1 filing, but just in a more digestible format. But you typically get a little bit more information. And this is where we usually find this expected pricing date. It says here, the expected pricing date is March 27th, 2025. So if it prices Thursday night, we know that it's going to start trading on Friday morning. What time? I've got a blog post on this called "What Time Do IPOs Start Trading?" These high demand IPOs don't usually start trading until the afternoon, the early afternoon. I've been tracking the time of these IPOs and they usually come out around 12:50 or 1 o'clock. It could be a little earlier. These aren't early morning IPOs. It takes time in the morning for price discovery. And so the underwriters are going to gauge supply and demand, and then we see what time this thing opens. So CoreWeave is trading on the NASDAQ under the symbol CRWV. One of the interesting developments when the amended S1 filing came out is that Robinhood gets a mention in the S1, which means that Robinhood investors are likely going to get a chance to invest in this IPO. Sometimes we don't know which retail investing platforms are going to get shares. I usually search these S1s for Robinhood and for SoFi Invest to see if it's in there. In this case, we do see Robinhood, but Robinhood shares are not showing up on their website yet. if you're in your Robinhood app, you just go to the Invest tab, you scroll down, and you find this little icon for IPO access, and it shows that there's been 22 IPOs on the Robinhood platform in the past, but there are no current IPOs. And so that tells me that maybe they're going to wait till next week, or maybe they're not going to get shares, or they're not sure. So I'm watching this one. I'm checking my Robinhood app a couple times a day to see if shares show up there. Fidelity, there's a good chance Fidelity will get some, so I'm checking that as well. But in terms of retail access, that's, I think, your best bet. Robinhood, of course, has a lot of customers, so you're not going to get a huge allocation. But if you're interested in the IPO and you want to participate, it might be worth trying to pick up some shares on CoreWeave. Now, I want to stress that I'm not recommending you buy or sell CoreWeave stock when it goes live or even in the IPO. We do try to find IPO opportunities where if these underwriters are trying to build in a pop, that if you can get shares at that IPO price, then you can participate in that pop. Doesn't always happen, but a lot of these high demand IPOs, that does work. Long term, I'm not here to tell you what to do with CoreWeave. There are plenty of analysts out there doing that. And I want to point out one article out there that a guy named Ed Zitron wrote on March 17th. It's called CoreWeave is a Time Bomb. And I put a link to this on my CoreWeave page on my website, and it's getting a ton of clicks. People really like that contrarian view. So why does this guy hate this deal? Well, he's essentially saying that the financial stability isn't great. Of course, CoreWeave's a high growth company. It's a lot of revenue, but they've also borrowed a lot of money. So he spends a lot of time pointing out the debt. He's also looking at the dependency on Microsoft. Now, we know that Microsoft is 60% of CoreWeave's business. We also found out a few days later, after the initial release of this S1, that OpenAI is now going to be a pretty big customer. They're doing $12 billion over the next 5 years. So there is some diversification. And if Microsoft and OpenAI are fighting over GPUs, and maybe some other players could come in there. But really, this guy, Ed Zitron, he's pointing out the high debt levels. There's some material weakness in financial reporting that they touch on in the risks. It's worth a look. And he also seems to be an AI hype cycle skeptic. AI is the future, right? Everyone agrees that AI is not going away. It's the next big thing, or it's the big thing now. But the way these hype cycles work is there's just tremendous growth at the beginning, and then eventually everyone realizes that maybe this stuff's growing too fast, and there's a big downturn, and then eventually it recovers. This is how the internet boom worked years ago, which is a pretty good comparison to the AI hype cycle. So this guy makes some valid arguments. Read it for yourself. Make your own determination before you invest in this deal. Read the S1 and decide if you want to participate either in the IPO or invest long-term. A lot of times we find these companies that go live like this, when they debut, the stock price jumps, and it may be an opportunity to get some short-term gains there if you can get in at the IPO price. But then we find 6 months later, the price takes a nosedive, and the retail investors who buy on that spike or at the peak end up holding and losing their shirt. And the professional investors make all the money and exit at the top. So don't chase this IPO or any IPO after the IPO. If you can get in the IPO price and you've read the S1 and you feel like the risk is worth it, then you might have an opportunity to get a pop. If you're a long-term investor, that's not my expertise. You go do some research on that, or find someone else who's doing long-term research on this company. I do tend to agree that there is a hype cycle happening right now, and that these AI companies are really getting overvalued, or at least they're growing quickly. And we've seen it before in fintech in 2020 and 21. We saw it in the internet age. So beware the hype cycle. Understand how the hype cycle works. And this article is definitely worth a read if you're a skeptic. So I'm not here to make recommendations. You make your own determination. Just here to deliver some facts to you so you can be best prepared going into this IPO and any other one. All right, let's get into the Klarna IPO. So Klarna is a fintech. It's known as a buy now, pay later company, but Klarna is slick because it gives people flexibility in the way that they want to make their payments. One of the most popular services is this pay in 4 interest-free product. And the way this works is you buy something with Klarna. They have various corporate partners that integrate with Klarna, and you can pay through the app. And then they let you do this pay in 4 interest-free. They also offer interest products like shopping portals and different services in the fintech space, but this is their most popular service as far as I understand. So the way this works is they partner with all these different brands. I see H&M and Uber and Macy's and Shein and North Face and all these different companies, Apple apparently. So if you use Klarna, apparently the companies pay Klarna a small kickback if they use this pay in 4. Klarna integrates with something like 675,000 merchants, some really large global brands, and you can use this pay in 4 service, which a lot of people really like that flexibility. So Klarna filed for an IPO. They filed their F1 filing. It's a foreign company on March 14th, and we expect this deal to go through probably the first or second week of April. It's about a week behind CoreWeave, and CoreWeave actually moved pretty fast. Klarna IPO, probably that first or second week of April. So we haven't got the terms yet. We'll get the terms in a week or two. They'll amend the S1 filing, and they'll fill in the blanks here. You can see there's no, I'm just sharing my screen here. The initial public offering price, there's no range yet. There's no number of shares. We do have the joint book running managers, Goldman Sachs, JP Morgan, Morgan Stanley, the same trio that's running the CoreWeave IPO. So this one's been a long time coming. Klarna had expressed interest in an IPO around 2020, 2021. And if you look back to those times, the Series H, this company was valued at $45 billion, almost $46 billion on June 9th, 2021, which is a really extraordinary. I mean, that was a crazy time. The IPO and the private market euphoria of 2021. Of course, in 2022, all the fintechs crashed. Several of them IPO'd, like Robinhood and Coinbase. They IPO'd, they raised a bunch of money, and then the stocks tanked, and retail investors who were holding up here and kept holding on lost a lot of money. In this case, we now see Klarna significantly down from its Series H in 2021, and these venture capitalists lost a lot of money. We've got a list here of investors: SoftBank, Westcap, Honeycomb. These guys invested at the Series H at a $45 billion valuation. We're going to see some big losses from these guys. But this Klarna deal, they've been talking about releasing this at about a $15 billion valuation. And we're seeing on Caplight, I'm looking at Caplight here. This is a pre-IPO marketplace data aggregator. Current price is around $12.7 billion, and that's down from 15. We even saw some numbers around 15 to 20. That was the reporting going into this IPO. But I think headed into 2025, things were a little cheerier. And we've seen several public companies lose their valuation, Affirm being one of the big ones, down more than 40 or 50% since the peak of the market, I think in February of 2025. So things have come down quite a bit. So even though Klarna aspired to IPO at about 15 to 20 billion, it's looking more likely to be around 12 or 13. Because usually the IPO prices do track these pre-IPO marketplaces. Not much activity on the Hive marketplace, a few transactions, I think closer to that 10 to $12 billion range. So a couple things to point out in this Form F1. First of all, the CEO of this company was talking about a direct listing at one point or a Dutch auction. He admired the Google IPO. There's no mention of a direct listing or a Dutch auction in here. And there's also no mention of a directed share program for customers. So we were hoping, or we still have hope that customers of Klarna could potentially participate in this IPO, but there are no indications of a directed share program. When the terms are released, we'll check again to see if there's something there. That actually did happen with CoreWeave. There was no mention of a directed share program the first time around, and in the second filing, there was. So as far as we know, at least right now, retail access is still a mystery. We don't know if Robinhood is going to get shares. We don't know if TradeStation through Click Markets or Webull, and we don't know about SoFi Invest. But when the terms come out, I'll be searching through the S1 to check to see if those companies are mentioned. And even if they're not mentioned, there still may be a chance to invest. I have a hunch that either Robinhood or SoFi Invest will get shares of this deal, but we won't know until about a week out. We'll see the terms. We'll see the IPO Roadshow. We'll get an IPO date and a pricing date and a range, and then go through the motion again. Underwriters are going to take this deal to institutional investors on the roadshow. There will be a retail roadshow deck for us to walk through. We'll get a price range, we'll get a valuation, and then investors can decide if they want to invest in or not. And we'll also see if they're going to price this one low, just like they did with CoreWeave. They may wait to see what happens with CoreWeave before they price this thing. Walking through these S1s or these F1s, you're always going to see the happy stuff. This GMV number here is called the gross merchandise volume, and that's just the total volume of dollars that goes through Klarna. It's not considered revenue though. So if you buy a Peloton and you use Klarna, or if you buy something at Walmart, the dollar values they track, but that doesn't count as revenue because revenue is what they get paid and not just what they transact. So you can see that this GMV number, this gross merchandise volume number, has really jumped from 2020 to 2024. So they're really highlighting that people like using this app. They expanded into the US, and that was a big piece of their growth. Klarna works with a lot of great brand names. Since they released the S1, they've announced a deal with Walmart that they're taking the business away from Affirm, its competitor, and also DoorDash. So if you're going to order food and you want to pay in full, or you want to borrow money to pay for takeout food, you can now do that with DoorDash. Disney Plus, Etsy, Shein, Airbnb. So a lot of great names here, Spotify. People like working with Klarna and customers like using the product. So I'm not going to walk through this whole F1 filing. It's massive. It's actually bigger than some of the other ones I've walked through. There's a lot of graphics and a lot of information, a ton of risks. So if you're going to invest in this deal, it's worth reading through. Although I find that this is somewhat of a complicated business. They've really made things easy for the customer while doing a lot of work on the back end to make this business work. I really like this one chart. It's on page 114 or so. It's called Our Network's Growth. And I kind of joked with this on Twitter because there's a line chart, and it's going from low on the left side and to high on the right side, and it's highlighting that $53 billion GMV transactions in 2020 and then $105 billion in 2024. But what I really liked about this is on the bottom, it has this long bar that says here profitable, and then instead of saying unprofitable, it says U.S. entry. And so they want to be clear that they were profitable, but when they expanded into the U.S. and they really invest in the U.S., they become unprofitable for a while, but they are profitable now. Looking at revenue, this company grew from 2023 to 2024 about 23.5%. And now you can kind of see why they want to IPO in 2025, because they have that growth of 23.5%. If they're not growing as fast next year, they didn't want to wait for the IPO, and that's what these companies try to do. They want to IPO on that growth swing so that they can show off to investors that they are now profitable and growing their revenue. Looking down at the net profit, 2022 they lost about $1 billion. In 2023 it was about $244 million, and then they swung to a profit in 2024, $21 million profit. But that's the trajectory we want. We want to see revenue growing. We want to see profitability head into this IPO. Whether they can keep going or not, we'll see. But this is a good environment for them to be IPOing, even though the market's a little shifty right now. So two big questions remain to be seen. First, are retail investors going to get access to this deal? I hope so. We'll see in the updated filing if there's a directed share program, or that week headed into the IPO, we'll find out if the brokers are going to get any shares for retail investors. $15 billion IPO, there's a pretty good chance that shares will get distributed to retail. How many? We don't know. And of course, if there's a lot of demand, it's going to be hard to get shares. Second thing we're looking at is, if this is a successful IPO, does this kick off the next wave of fintech IPOs? Fintechs got crushed in 2022, and now we've seen a recovery in fintech in the public markets since the election. Certainly some of the stocks started going back up because of the crypto, and we'll talk about a crypto company a little bit here, but fintechs have come back down since the election, or since the inauguration really, since the stock market has gone down about 10% from its peak. But a successful Klarna IPO could lead to the next wave of IPOs for fintechs. A couple in line is Chime. Chime is one that we've been talking about for a long time. It also went through that high peak to that low trough in the private markets from 2020 to 2021 and then into 2022. It lost a lot of value, but Chime has been talking about going public. Another one is Kraken. Kraken, I think we might have talked about that last week. Kraken is a cryptocurrency exchange. It has indicated its aspirations to go public possibly in the coming year. Another one is Circle. Circle has been on our top 10 list of upcoming IPOs for a while now. It's a cryptocurrency stablecoin that can help facilitate international transactions, one that people were very excited about. And then another exchange is Gemini. The Winklevoss twins, their company Gemini, has filed confidentially for an IPO as far as I understand. So Gemini is another one that could move forward now that Klarna is going to break the streak of no fintechs or no big fintech IPOs. And we also have this regulatory environment that the perception is it's better than it was under the last administration. So we are seeing some lawsuits by the government against certain cryptocurrency companies going away. We are seeing less scrutiny at the SEC. We're seeing less scrutiny for possibly mergers and acquisitions. And we'll talk about a deal that's coming up soon that we think the regulatory environment has helped. So that loosened regulation, or at least the perception of more friendly regulation toward fintech, plus this Klarna IPO, could lead to some more IPO volume in 2025 and certainly by 2026. So we're going to be watching for that. Next up, let's talk about some companies on our IPO radar. So any company that I've written about or follow on the Access IPO's website, I consider an IPO radar company. These are companies that I monitor their news and I update the website. And we see a lot of these companies raising money, or sometimes we see them get acquired. These are companies that hopefully will IPO in the next 1 to 5 years or so. And more importantly, they're companies that people are interested in companies that retail investors want to own, but usually can't as private companies. Sometimes you can get access as these companies are private, but when they IPO, then we can all participate and people who are passive index investors can participate. And so we want to see these companies IPO, and I call them my radar companies. I'm going to talk about a few today that have hit the news. And the first one is this Fervo Energy. So Fervo Energy is a geothermal company, and it's made news recently because it's partnering with big brands like Google and Berkshire Hathaway to build power plants. So it has this technology, but you can't just build a geothermal power plant on the cheap. You need big investors. So they're building this geothermal plant near a Google data center, and Google is going to front the money. Google's going to be the customer that takes this energy when it's there, but it takes some time. But the big news is that Fervo Energy is moving toward a possible IPO in 2026 or 2027. So there was an energy conference, I think in Texas, called CERAWeek, that apparently the CEO talked to a few people. Axios is one source. The company is targeting a $2 to $4 billion valuation, according to a source familiar with the offering. TechCrunch had a conversation as well. So TechCrunch and Axios both reported on this story. Geothermal unicorn Fervo Energy may IPO as early as next year. And Fervo raised about $250 million in February 2024, and then another $250 million in December of 2024. So this company has a business plan and a business model that VCs like and Google likes. They're going to be able to produce some green energy. We know a lot of these big tech companies have these green energy plans or milestones that they need to reach. And so geothermal is one way to do that. Good to see a climate tech company, pretty high profile one that we've written about, on the road to an IPO. Bringing them to the public markets will make that easier for retail investors. The next story we're following is Ripple. So Ripple is one of these companies that's a cryptocurrency that had trouble with the SEC. And we found out this week from CEO Brad Garlinghouse that SEC is going to drop their case against Ripple. Now, I'm not a securities lawyer. I don't know the real details of this. I'm not a crypto bro either. But I do know that crypto bros really love Ripple. They really love the XRP cryptocurrency. The whole issue with this was that the SEC called XRP, or wanted to call XRP, the cryptocurrency, a security. And Ripple's defense was, no, it's not a security, it's a cryptocurrency, which of course SEC hasn't been totally clear on all their regulations. But this release of this lawsuit for Ripple is a really big deal, because now that this lawsuit is gone, the company can move forward with its plans to use XRP as a currency that will facilitate international transactions much cheaper than the current options out there. We've talked about Circle. Circle is aiming to do it as well. But XRP has, the way this XRP cryptocurrency works, apparently is as the value of the currency increases, the company still holds something like 50% of the XRP. And so they can sell XRP into the market slowly to raise funds for growth. And if this currency starts facilitating international transactions, then it's going to be a really big deal for the company. A lot of pre-IPO investors have gotten access to this because it was on Link 2 pretty extensively. Link 2 was really pushing this one, if you're familiar with that pre-IPO marketplace. So a lot of investors, a lot of retail investors own this one. A lot of retail investors have a stake in XRP. So it's another one to watch. If you go to my website, search for Ripple, and you come to the article, and I'll put a link in the description as well, there are some quotes that Brad Garlinghouse has made about his IPO ambitions. And he essentially said, an IPO is not a priority, especially while we're dealing with this SEC BS. So Garlinghouse said, an IPO has not been a priority, and part of that's because the SEC is not our friend. We want to make sure our shareholders have liquidity and that they're happy, but it's not a high priority. But he acknowledged that even when an IPO becomes a priority, it usually takes 12 months to go public, and we all know that to be true. On the Ripple page, I've embedded the interview with Brad Garlinghouse, and you can check that out on YouTube. He was also on a 60 Minutes episode where it was a pretty big deal when he was featured there, and it was very good for XRP. So he is talking about an IPO at some point. And again, as Klarna goes public and maybe Circle and maybe some of these other companies, Gemini, Kraken, when they start going public and they're raising money in the public markets and investors are buying, long-term investors are buying, institutional investors are buying, Ripple's going to see that and maybe decide that it's time for them to move forward with an IPO. At this point, 2026, I suppose, is a possibility, maybe 2027. So another one to watch. Perplexity is the Google search competitor. And if you've ever used perplexity.ai, it is a very nice experience. It gives you the answer you're looking for if you type in a query, but it also gives you the sources. It's a very good user experience. Perplexity raised at a $9 billion valuation just in December 2024. And a report came out this week. Perplexity is reportedly in talks to raise up to $1 billion at an $18 billion valuation. So is it a hype cycle, AI hype cycle? Perplexity isn't really an AI company. It's using AI, and a lot of these companies are using AI to do other things, and Perplexity is a search engine. And so there's a lot of market to be taken from Google and Bing with search. So there's a lot of VCs who didn't participate in Google or don't have friendly relationships with Google that want to invest heavily in Perplexity because they do see an opportunity to take a bite out of Google's dominant market share. Perplexity has been one I've been following since it was $1 billion valuation, $18 billion now. This one could have room to run, but this thing's doubled from December 2024 to March 2025. If that valuation is true, then it could be some AI hype cycle activity in there. But if they're growing revenue to support that valuation, then it's something we need to pay attention to. It does say here their recurring revenue has now reached $100 million. So it's growing fast. Just today, Friday afternoon, I was editing this video and we learned that StubHub, which we talked about last week or the week prior, has filed for an IPO. StubHub was supposed to IPO in 2024, but it pulled the IPO due to, quote, choppy market conditions. StubHub does look like it's moving forward now. We don't have a lot of details, just what's in the S1. There's nothing about the terms or directed share program, but it's a topic that we'll likely cover in detail next week. Last but not least, Google takes a whiz. I keep making myself laugh with that stupid phrase, but Google has bought Wiz. And this goes back to last July of 2024. Google was trying to buy this company at a $23 billion valuation, and the deal fizzled out. And people think that it fizzled out because of regulation scrutiny. So the impression was that Joe Biden's administration and the Department of Justice wouldn't like this merger or this acquisition. Just the regulatory scrutiny might be a little too harsh on Google. But now that the administration has changed over, looks like Google thinks the regulation isn't going to be a big problem anymore. So the initial deal was a $23 billion deal that fell through. Google added another $9 billion to that. So a $32 billion acquisition for this Israeli company, Wiz. It does cybersecurity in the cloud. And so Google Cloud is moving aggressively to take this one over. And one of the interesting pieces of this is that Google offered a breakup fee of $3.2 billion, 10% of this deal, if it falls through due to regulations or due to Department of Justice or whoever deals with monopolies and it doesn't like this deal. So big breakup fee, but my take on this deal is it makes me sad, right? We always want to see IPOs. We want to see more public companies, especially in fast-growing, high-quality companies like this. We want to see them go public so that we can invest in them, so that retail investors can invest in them, so that our index funds and ETFs can invest in these great growth stories. Instead, it gets swallowed up by Google. This company is worth about 1.5% of Google's overall market cap. So when you think about that, if you want to participate in the growth of Wiz, it's just a drop in the bucket for this whole company. So if you buy Google stock, you're really not going to get any upside because of this deal. It's sad to see. We really want to see more public companies, and I was disappointed in this, especially because in January, the new CEO was talking about how he wanted to IPO this company, how they wanted to remain independent. But Google just set their sights on this company. And it goes to show that the Mag 7, if they really want to buy your company and they want to throw a bunch of money at you, it's very hard to say no, especially if you have venture capital investors who invested at the early stages. And I believe Sequoia and Index Ventures invested pretty early in this one. And Sequoia is going to walk away with a 25x return for about $3 billion. And so if you take on venture capital investors, you may not always have control of your destiny. And I think that was the sad case of Wiz. their employees, their founders are going to walk away, multi-millionaires, maybe some billionaires in there. But it's another loss for retail investors. We really want to see these companies IPO. And this one, unfortunately, is just getting swallowed by Google and Google's ecosystem. That's all for today's episode. If you like what you heard here, please subscribe on your favorite podcast listening network. Video is also available on Spotify and YouTube. If you like the show and want to support it, go to accessipos.com and subscribe to the newsletter. Also, check out some of the links in the description for more information on what you learned today and for ways to support the show. I'm Craig Stevens from Access IPOs. Thanks for listening. Thanks for watching, and I'll see you next week. This video is not a recommendation to buy or sell any startups mentioned. Pre-IPO and IPO investing involves significant risk. Conduct due diligence by reading the SEC S1 filings before participating in IPOs. Do not invest in IPOs with money you cannot afford to lose. Thanks for watching.